Hi everyone. Today we're going to be looking at ways of how we can reduce our tax liability legally through forms and deductions and credits. So we're going to start out with just looking at some terminology and some basic ideas about this, and then later on in a different video we're going to look at actually filling out the form, and that's going to take us a little bit of time. All right, so we're trying to work on understanding the difference between a credit and a tax deduction. So first of all, you're going to find all of this information in what is called the Publication 17, your federal tax return. This is where you're going to find the instructions on how to fill out all of your different forms for your tax return. Now, there's a difference between tax avoidance and tax evasion. So tax avoidance is when you, the taxpayer, uses the rules to lower the amount of tax. This is totally legal. So in other words, we're going to be taking a look at, here's how much money I made. How can I reduce the amount of money that I pay taxes on? Where tax evasion is where the taxpayer lies about the information to avoid paying taxes. So let's say the person made $1 million and they only report 500,000. So they're lying about how much money they made. So we can legally reduce our tax liability by using what is called deductions. Now, the big thing about this is that these deductions are taken before you look up how much tax you're going to pay in the tax table. So medical expenses, student loans, educational expenses, and this is just a small list of things that you can deduct before looking up your taxable income. Now, tax credit are things that you subtract from your tax amount. So this is done after you look it up in the tax table. So deductions are before, credits are after. All right. And what we're going to look at is Schedule 1 and Schedule A. And this is where we're going to itemize all of our deductions. Because remember that we have this standard deduction that you're allowed to take for single and married and stuff like that. And that's on our form. But sometimes if you itemize and make a list of everything, you might make out better than that standardized deduction. Okay, so we're going to look at some problems here of just working with the difference between tax credit and tax deduction. And then later on, we're going to get into the full form. All right, so we have Megan here, and she paid $9,212 for her medical insurance last year. But she also had $5,700 in medical expenses. Her medical insurance only covers 80% of these expenses. Now, the IRS allows medical and dental expense deductions for the amount of 7.5% of the taxpayer's gross income. So if Megan adjusted gross income is $65,432, how much she claim in the medical deduction category? Well, this one we have to do a little bit of work. So the first thing we're going to have to do is find 80% of her medical expenses, because that's how much her medical insurance covered. All right, so we're going to take that 5,700 and it covered they covered 80%. She paid 20%. Okay, so let's find out how much she paid. Okay, so we're going to take 20% of the 5,700. Okay, so she paid $1,140. Now, we're going to add that to her insurance so we can figure out how much total medical things she did last year. Okay, so we're going to take the 9,212 plus the 1,140. Okay, and we're going to get $10,352. So that's how much medical she paid for last year. So that's her insurance and her expenses. Now, according to the IRS, they will allow you to deduct if you exceed 7.5% of your gross income. So we have to take 7.5% of Megan's gross income and figure that out. Okay, so that's $49,907.40. Okay, so it has to exceed that much. So we have to figure out how much did it exceed. So we're going to take her expenses and subtract her allowable amount. Okay. Okay. Okay, so her allowable deduction is $5,444.60. Okay, so let's walk through that one more time. We had to figure out how much did she pay in her medical expenses. So she paid 20% because her insurance covered 80%. And then we added it to her insurance. Okay, so that's like her out-of-pocket expenses. The government allows you to take 7.5% of your gross income for medical expenses. If it exceeds that, the difference between what you paid and what you're allowed is how much you're allowed to deduct. Okay, so she was allowed to deduct $5,444.60. All right, so here's Jonathan. He's a single taxpayer. His total income before deductions was $63,110. He was able to reduce his income by $10,312 when he filled out his Schedule A and Schedule 1. How much did he save in tax by using Schedule A? All right, so I guess we have to figure out how much his tax would have been in before, and then how much his tax would have been after. Okay, so let's look up before on the tax table, 63,110, and find his taxes. Okay, so 63, oops, wrong direction, 63, 110, and he was single, so 9,746. Okay, so that's how much tax he would have paid before doing his deductions. Now, let's take a look at after. Okay, so after his deductions, now we're going to have to figure out how much his tax is. So we have to take 63,110, subtract his deductions. Okay. All right, so we get 52,798, and that's what we're going to look up in our tax table now. Okay, so 52. There it is. All right, so that's 7,469. Okay, 7,469. All right, so there is a difference between before and after. So his difference in his taxes would be 9,746 minus 7,469. Okay, I got $2,277. So he saved quite a bit of money. Okay, now he saved all his receipts and he did he kept everything during the year and filled out all the applicable receipts in his folder, and he took only 2 hours to total the receipts for each category and fill out the Schedule A and Schedule 1. How much did he save per hour? Well, I guess maybe we should figure out, take the $2,277 and divide that by 2 so to figure out his cost per hour, how much he saved per hour. So that's $1,138.50. That is not a bad pay rate. All right, let's take a look at Mr. and Mrs. Delta here. They filed a joint tax return, and together they had an adjustable gross income of $99,830. Their total deductions were $16,848. Okay, so what is their taxable income? All right, so we're going to take that $9,830 and subtract the $16,848. okay, to figure out their taxable income after deductions. Okay, so that's $82,982. Okay, so what is their tax? So let's go back to our tax table. Find 82,000. Okay, 82,982 right here. Okay, so that would be $9,972. Okay, so that's how much tax they owe after the deductions. Now, they have a child care credit of $2,100. So what is their liability after the credit? Now remember, their tax credit takes place after we figure out how much tax they owe. So we're going to take their tax they owe, so which is $9,972, and subtract their tax credit. Okay, so they owe now $7,872. Now, their employers withheld $7,201 in income tax. How much money do they owe in the government? So we're going to take the difference between these two. And they only owe $671. All right, let's try one more and then we'll call it a day. All right, so we have Denise here who is divorced with a child and she files as head of household. Her taxable income was $76,312 before she filled out all the adjustments to her income. She had $9,200 in Schedule 1 adjustments. How much did doing the Schedule 1 save her in taxes? So I guess we better figure out how much she had before the deductions and how much she would pay after deductions. Because sometimes it may not be worth to take all those deductions. Sometimes the credit might be better. So before, okay, let's figure out her tax. So $76,312. Again, we're going to look it up in our tax table. Okay. Oh, here it is. And she's head of household. So that's $11,230. Okay, so that's how much tax she would owe. All right, so after she takes her deductions, so we have to figure out how much her income is then. Okay, so 76,312 minus 9,200. Okay, so her taxable income is 67,112. Okay, so let's take a look at what that would be on our chart, our table. Okay, so 67,000. I overshot. There it is. 112. Again, head of household, $9,206. Okay, is that right? Yep. Okay. All right. So we want to know how much did it save her? So we're going to subtract. So let's do this. Let's call it savings. It's 11,230 minus 9,206. Okay, so we get a savings of $2,024. All right. So if you have any questions, please let me know. And remember, please stay in to stay safe, guys. Talk to you soon.